The Indian stock market saw a sharp sell-off today with the Nifty falling close to the 24,000 mark and the Sensex dropping over 1300 points. At one point during the day, the market was down almost 3%, wiping out more than 8.5 lakh crore of market value in just a few hours. So, what exactly triggered this fall? Was it a crude oil, global war tensions, FII selling, or there is something else? Let's break down today's market action in a simple data driven way. Let's first look at what happened to the major indices. The BSE Sensex closed at near 77,500, falling close to 1,350 points or about 1.7%. During the day, the Sensex actually crashed over 2,400 points, touching an intraday low near 76,400 before recovering slightly. The Nifty 50 also saw heavy selling pressure. It closed at near 24,000, down to 422 points, and during intraday trade, it slipped to an 11th month low, falling below 23,700. The biggest damage came from the banking sector. The bank Nifty dropped over 3%, closing around 56,000, showing a clear weakness in the financial stocks. Meanwhile, the broader markets performed even worse. Both Nifty mid-cap and small-cap indices fell more than 2%, indicating that selling pressure was spread across the entire market. Now let's look at which sectors were hit the hardest. And the auto sector was the biggest loser, falling more than 4%. Stocks like Tata Motors, Maruti Suzuki, Eicher Motors, and Bajaj Auto saw heavy selling. The banking and financial services sectors also witnessed strong pressure, especially PSU banks, as rising global bond yields created concerns for financial stocks. Another sector that came under pressure was oil marketing companies and airlines because crude oil prices surged sharply. Higher the crude oil means higher operating cost, which often directly impacts margins. But not everything was negative. IT and pharmaceutical companies showed a resilience today. The Nifty IT index actually managed to stay slightly positive, supported by a weaker rupee, which benefits export-oriented IT companies. If we look at the Nifty 50 stocks, only a handful managed to close in the green. Among the top gainers were Wipro, Reliance Industries, Apollo Hospitals, Infosys, Sun Pharma. Most of this came from IT and healthcare, which acted as defensive sectors during the sell off. On the other side, the top losers were mostly from the auto and cyclical sectors. Tata Motors fell more than 5%, Ultratech Cement dropped over 5%, Eicher Motors, Maruti Suzuki, and Bajaj Auto also saw sharp declines. So, what exactly triggered such a sharp fall in the market? So, there are four major factors driving today's sell off. First is geopolitical tensions. The ongoing conflict in the Middle East involving the US, Israel, and Iran has increased global uncertainty, pushing investors into risk off mode. Second is the surge in crude oil prices. Brent crude has spiked above $110 per barrel, which is a major concern for India. Since we import most of our oil, higher the oil prices mean higher inflation and pressure on the trade deficit. Third is the weakening Indian rupee. The rupee touched a record low near 92.3 against the US dollar, which increases import cost and adds more inflation pressure. And finally, we are seeing continued FII selling, right? Foreign investors have been consistently pulling money out of Indian equities, which is amplifying the downside momentum. What should investors watch next? Many people are asking, will the market fall more? Even if we mark some support zones for Nifty, we still cannot say anything with full certainty. A big event like something related to war or global tensions can change the market quickly. The direction of the market will mostly depend on global factors, especially crude oil prices and geopolitical tensions. So it is better not to predict too much right now. We will wait and watch. If you want more insights like this, make sure you subscribe to the channel. And if you want to test your own strategies on Indian stocks, you can use our in-house built backtester. Check out the Boss Investor app link in the description, and I will see you in the next market update. Thanks.